Mezzanine loans, unlocking financial opportunities with strategic financing. In today's dynamic and ever evolving business landscape, companies often face a conundrum when it comes to raising capital for growth and expansion. Traditional bank loans may not always be feasible, and equity financing could lead to a lot loss of control. In such cases, mezzanine loans have emerged as an attractive financial tool that bridges the gap between debt and equity. This video will dwell into the intricacies of mezzanine loans, exploring their features, benefits, and risk, and how they can empower businesses to reach new heights. Mezzanine loans are a type of financing that combines elements of debt and equity to provide a unique funding solution for business. These loans are typically used by companies to raise capital for various purposes such as expansion, acquisition, refinancing, or work capital needs. Mezzanine loans can be a valuable tool for unlocking financial opportunities and achieving strategic objectives. What is a mezzanine loan? A mezzanine loan, also known as mezzanine debt or subordinated debt, is a hybrid financial instrument that lies between senior secured debt and equity. The term mezzanine originates from the Latin word medius, which means middle. As the name suggests, the mezzanine loan occupy a middle ground in the capital structure of a company, making them unique in the realm of finance. Mezzanine loans are typically used to fund growth initiatives, mergers and acquisitions, management buyouts, or recapitalization. They can be particularly appealing to established big companies with a proven track record seeking additional capital without diluting existing equity stakes or assuming the risk of full equity financing. Key features of mezzanine loans. Subordination. Mezzanine loans are considered subordinated debt, meaning they rank lower in priority compared to senior debt in the event of default or bankruptcy. This subordination leads to a higher risk profile for investors, but it also offers potential for a greater returns. Equity-like elements. While mezzanine loans are debt instruments, they may include equity-like features such as warrants or equity conversion rights. These features allow lenders to participate in the company's future growth and success, potentially leading to a higher returns than traditional debt financing. Flexible repayment terms. Mezzanine loans often come with more flexible repayment terms than conventional bank loans. Rather than adhering to fixed repayment schedules, borrowers might have the option to defer interest payments or pay interest in kind, reducing immediate cash flow burdens. Higher interest rates. Due to the higher risk profile, mezzanine loans typically carry higher interest rates than senior debt. However, the interest payments are often tax deductible, providing a potential advantage to borrowers. Payment penalties. Mezzanine loans might include repayment penalties, discouraging borrowers from paying off the loan before a certain period. This is because lenders expect to receive the interest income for a specific duration, and yearly repayment could affect their expected return. Benefits of mezzanine loans. Increased borrowing capacity. By securing mezzanine financing, companies can enhance their borrowing capacity without diluting ownership or control. This increased capital can be instrumental in funding growth initiatives or strategic acquisitions. Preservation of ownership. Entrepreneurs and business owners often cherish their autonomy and control over their ventures. Mezzanine loans allow them to maintain ownership positions while still accessing substantial funding. Tax efficiency. The interest payments on mezzanine loans are usually tax deductible, providing businesses with potential tax advantage compared to equity financing. Flexible use of funds. Mezzanine loans typically have no specific restrictions on how the borrowed funds should be used. This grants borrowers the flexibility to allocate the capital where it is most needed within the organization. Alignment of interests. Mezzanine lenders often have a vested interest in the success of the company, as the returns are tied to the company's performance. This alignment of interest can result in a more collaborative relationship between borrowers and lenders. Risks associated with mezzanine loans. Higher interest cost. Mezzanine loans usually come with higher interest rates than senior debt, which can increase the overall cost of borrowing. Increased debt burden. Taking on advantage additional debt through mezzanine financial adds the company's overall debt burden, impacting its financial leverage. Potential loss of control. While mezzanine loans do not involve dilution of ownership, they still involve taking in additional creditors, which may influence decision making and strategic choices. Default risk. As mezzanine loans are subordinate to senior debt, in the case of default, the mezzanine lenders might have limited recourse to recover the investment. Market condition. Mezzanine loans are often sensitive to changes in the market conditions and the overall economy. Economic downturns often could affect a company's ability to meet interest and principal payments. It is important to note that mezzanine loans are not suitable for all companies and situations. Businesses considering mezzanine financing should carefully evaluate their financial situation, growth plans, risk tolerance before proceeding. Consulting with financial advisors and experienced lenders can help determine if a mezzanine loan is the right fit for the company's strategic financial needs. So, mezzanine loans represent a powerful financial tool that can unblock opportunities for companies seeking growth capital while maintaining ownership control. By understanding the unique features, benefits, and risks associated with mezzanine financing, businesses can make informed decisions about the capital structure and propel themselves towards success. As with any financial decisions, careful evaluation and due diligence are essential to ensure that mezzanine loans align with the company's strategic goals and long term vision. Thank you.